What's going on, everybody? It's your boy C-Zar, and we are talking about ACH Alchemy Pay today. Hit that like button, you guys. Subscribe if you want to see more content like this, and let's just get into it. Waste no time at all. We're sitting at about 4.5 cents. You're in the midst of a 20.7% move up to the upside and counting. It keeps growing. You've got about 7 hours and 5 minutes left. Let's look at this thing. Let's look at it on a shorter term time perspective and see how much oomph you got. Are you going to continue? Are you stopping here? Is it a fake out? All that stuff. So first and foremost, I can say I'm pretty confident this is not a fake out, right? You got some decent volume here, increasing volume. That looks like a breakout candle to me. All you're missing now is the follow through. You need the follow through. I will say that this next hour that you just had, you have 4 minutes, 40 seconds left to close with not a lot of volume. I mean, it's not a little volume. It's definitely more than anything else you've seen. If it wasn't for this candle here, that'd be the most volume you've seen since this one back here. Seeing a candle like this does have me a little bit cautious that you might not continue to run immediately. So don't be discouraged if that happens. Okay, it's just an opportunity. Think of it as like a last call, all aboard, right? Move down maybe to like 4.43 cents, maybe all the way back down to 3.9 cents. You're at 4.5 cents now. But if you go down there, you're still going to go up here and likely beyond, right? It's inevitable. You might not even go lower. You don't have to. Your 1 hour RSI is overbought. You have a higher high, whatever. Kind of topped off in this area last time. Had a lot of volume. It's very common sometimes whenever you are in the midst of a breakout move. Sometimes you consolidate before continuing higher. You definitely don't. You would not want to get below the 618 here. If you get, it's okay if you wick below it, but what you don't want to do is start closing below it. You want to hold that because if you do close below the 618, this starts to look like a fake out, which makes this start to look like a rejection. And if that's the case, you're looking at going below these prices here, which are all the way back down at 2.9 cents. So avoid all of that. Hold that 3.9 cent area. You might not even see it, but you could pull back from here first before going higher, which again, you might not do, but it could happen. It wouldn't be crazy if it happened. It kind of calls for it in these areas. 15-minute time frame, pretty overbought, yeah. Hit the 90s, or almost hit the 90s. You're back at the overbought zone right now. You could bounce here, man. You could bounce. You could get a little bit more separation, maybe move up immediately, get that bearish divergence forming with a lower high in the RSI, higher low in the price. Maybe your volume diverges too. You get less volume on that move up. That could be good for a little bit of a pullback, and then you pull back to your 886, 786 area, something like that. Likely, if you were to continue going higher and you top off before hitting the 1272, likely you would hold the 786 as support, which that's at about 4.2 cents. But again, if you break below that, that's fine. Just hold 3.9 cents. That's really what you want to do. And if you get below 3.9, it's okay. It's not the end of the world. But you start closing below 3.9 cents, I'm going to have a very different tone on my next video, okay? Right now, it's optimistic. It's hopeful. It's bright and sunny. Things look good. Maybe a cloud is in the sky right now, but it's a very bright and sunny day overall. It's gonna continue growing. I think it will. Looking at the 15-minute time frame, it doesn't really make me believe it has to go lower right now. If anything, it makes me think you might bounce right here and move up and then move lower. But tomato, tomato, whatever happens, I'm pretty confident you do see prices probably back down at least, and you're not that far away from it, but at least a cent, not a cent lower, I'm sorry, a tenth of a cent lower at 4.43 cents, if not down to 4.2 cents, if not down to 3.9 cents, somewhere in this area, okay? And it can be just a little move like that. You get a little kiss like that, and then you start moving up above these prices, you don't need to go lower, man. That's it, and you're off to the races. In fact, that would be really bullish, I think. Now let's talk about some more probable things instead of all these what ifs, what if nots, right? Let's just talk about where you're going to go. So from a high to a low, this is a very small fib extension that we're measuring. This is a very small fib range. Oftentimes we call for the primary zone to be the area that you find resistance, but in times such as these, I think it's acceptable to consider the secondary zone, even parts of the tertiary zone up here, what we call the money zone. I'm going to start calling this the money zone. Let's just change this. Let's make this green. Let's make it both green, yeah. Let's do that now. It's been a long time coming. I've been meaning to do it. We're going to call it the money zone. Yeah, right there. Different shades green, whatever. I'll fix it later. But we could go all the way up there. You're at 4.5 cents now. I'm talking about prices that are at 12.6 cents being a possibility by the end of this move, by the end of February. It's very possible. Now, is it going to happen as it has over the past few days? Or are you just going to move right up there overnight? Maybe, maybe not. Maybe it takes weeks. Maybe you had your initial pop, and now it takes a little bit more constructiveness to get up there. But inevitably, I think that you would at least see 7 cents to 8.5 cents, if not 10 cents to 12.5 cents, something like that, okay? You're at 4.5 cents now. If we take this high to this low, this is a more significant fib, okay? The 2272 here at 10 cents lines up very well with the 2618 here. The 2618, which would be kind of my given maximum for this fib, is right at the given maximum for this fib too. So that agrees. That's kind of nice. You're at your 1272 now, finding resistance. You're likely going to find resistance here at 6.2 cents. Both golden extensions are right there at 6.2 cents. So you probably do find resistance. I don't think you top off there and then consolidate for a long time and then try again later. Maybe. But likely you top off here momentarily, consolidate here, and then continue to run up. That's my assumption. And if that's the case, you really do have a strong chance, I think it's seeing prices at 10 cents. Mark my words. Don't mark my words. Not a financial advisor, not a prophet. Everything I say is just a guess, right? We don't know the future. We're doing our best. We're using technical analysis and a little bit of applied logic, hopefully, to determine this. But my theory would be that by the end of this week, if not very early next week, you'll be at about 6.2 cents, there of which you'll probably top off. If you go higher than that within the next week, I'm thinking 7.5 cents at the highest, no higher than that in the next week, unless you just go straight ballistic, which you could do at any moment. But I'm thinking 6.2 to 7.5 cents, likely around that 6.2 cent area. Then we probably pull all the way back down to around the areas that we're at now. Likely, though, we probably hold 4.8 cents, if not 5.3 cents, somewhere in there as support. And then end of February, beginning of March, we begin our final trek to the upside, where I think you will stop at about 10 cents to 13 cents, 12.5 cents, something like that, somewhere in this zone by the end of the month, beginning of February, beginning of March. That's kind of my expectation. Could this consolidation last longer? Could it be bigger? Sure. Could it all just happen in one fell swoop? We don't know. But this is just my best interpretation. Take a picture of it, screenshot it, send it to me in a month. Let's see how accurate we are. Daily time frame here. You are getting overbought, which is nice. Anytime the daily RSI is overbought, that's actually a good thing. A lot of people, especially new people in the market, it's crazy whenever I see people who've been in the markets as long as I have, and they still say, "Oh, you're overbought. That's not a good thing." It's like, dude, what are you talking about? Look at this. You got overbought here. The first instance you got overbought. Was that a good time to sell? Let's see. Well, hell no, it wasn't. You missed the other half of the move. Absolutely not. Worst time to sell. In fact, most of the time, not always, there are times where you do get overbought, and the moment you get overbought, it's a great time to sell. Even then, it wasn't really that great of a time to sell, but sure, relatively speaking, it was. Sure. But most of the time, when you get overbought, it's a forewarning, it's a foreshadowing of the good things to come, of the stronger, consistent, strong readings to come. Okay? So we just had a taste. We're getting back into it now. My theory is if we apply it similar to this one over here, right? If you draw a line from low to high, you're basically right in the middle of that line there. Basically right there once you get overbought. So if we maybe do the same kind of thing, and that tends to happen a lot actually, so oftentimes you get overbought when you are about a third or halfway through the move. If this is half the move, maybe that's the other half. And that takes you up to 7.3 cents, which is kind of the given maximum that I would have for you to hit within this next week, right? I don't know. 7.5 cents, I don't know. It could happen. You could definitely see stronger readings too, though. You absolutely could see stronger. You don't need to just double it, right? It's not that cut and dry. If you see stronger readings in the RSI, if you keep going and you break 90, there's no doubt in my mind this thing would be above 10 cents, right? But time will tell. We'll see how it goes. 4-hour time frame, looking bullish. Looking bullish as hell. No, that's not bearish divergence. I'm not worried about that at all. No, I wouldn't call that bearish divergence. You're in an uptrend. You got higher lows. You got higher highs. You're in an uptrend. If it looks like bearish divergence, that's only for a moment. It's not bearish divergence, I'm telling you. Not financial advice, not bearish divergence. If it was, that'd be good for a move down to about 4.1 cents, 4.2 cents, maybe 3.8 cents at the most. Again, moving down to 3.8 cents is not bad. It's closing below 3.9 cents that you don't want to do. You could move down to 3.4 cents, man. You could shake all the way down to 3.4 cents, and then as long as you're closing above 3.9 cents in that same candle, I'm okay with that. That's okay. Wait for the candle to close, right? Wait for the candle to close. 4-hour time frame looks good. 1-hour time frame looks frisky, but again, maybe a little bit exhausted right now. 3-day time frame looks like it's just getting started. Weekly time frame, same thing. And then you zoom out. The more you zoom out, man, we should have started the video here. I think I did this last time too, but you zoom out. Might not be bullish enough, y'all. We really might not be bullish. This thing Screw 10 cents. Maybe you go to 12 cents. Maybe you go all the way to 20 cents. I don't know. When this thing breaks, I would think at least by the end, I'm going to change my end of month prediction. I think at a minimum, end of month, you'll be at 10 cents. End of February, you'll be at 10 cents. Maximum, you could be at new all-time highs, man. You could be at 50 cents. You could be at 30 cents. I'm not saying this is like a moon boy target. You want moon boy targets, they're above that. I mean this. Genuinely, by the end of the month, you could see a 10x. It depends. You're breaking out of a very bullish. Look at that pattern, man. That's an ascending triangle. You're looking very bullish right now. That's a lot of volume on a very bullish week. I'm just saying, man, you keep doing this. You could definitely see 30 cents or 49 cents by the end of the month. Now, I'm not expecting that. I'm not calling for that. I'm just more putting it as a possibility out there. And maybe it happens in March instead of at the end of February. But certainly I accept it as a possibility. With that in mind, I think anything from 12 to 20 cents is a likely target by the end of this month of February, if not beginning of March. So 4.5 cents now, just under a 3x, if not maybe even just under a 5x for your next month or month and a half. Not bad, guys. Not bad at all. I think the party will really get started. I think that you can expect good things if this week can close where it is. If we close above 4.34 cents in the next 3 days and 7 hours, you guys, with that volume, with that, like, dude, you're going. You are going to go to 11.1 cents at a minimum based on the price, right? Like, I genuinely feel like any target below that shouldn't even be considered. Maybe right here, which is at like 9.6, right? That's the given minimum range. Anything above that, I really do think that 12, 20 cents, even beyond that is possible. So I'm going to stop talking. I feel like stuttering and rambling because I'm just amazed at how well this chart looks, right? We did all the short-term stuff, and then finally the good stuff comes at the end. But hopefully the people that stayed to the end, you got a little kick out of that. I got nothing else for you. Hit the like button, subscribe if you want to see more content like this. Thank you all for being here. And one last shout out to Fonzie. Good job, man. Take it easy. Bye-bye.